What's up guys, it's Amas. Welcome back to another video. Today I'm going to be showing you 5 setups that you could have caught last week using the IFVG concept. So today we're going to be looking at a strategy that works really well if you're trading prop firms or you're just trying to go for base hits scalps. So right here we have what I call the inversion model. So let's start with the long setup. We have the long and the short setup. The long setup is you need basically a sell side liquidity sweep. So if you did not know, a sell side liquidity pool is basically just a swing low. Then you need to tap a higher time frame bullish for value gap right here, and right after that you need the leg that created the sweep to have one clear bearish for value gap like this to basically show us that we had aggressive sellers that were trying to push price down to sweep this low. Then you want to see price inversing that bearish for value gap, so you go long once those sellers are being squeezed, and you go for a 1-to-1 targeting the most recent high. Okay, if the RR is not perfect, then you go break even at the first high and you let the rest ride for your 1-to-1. Okay, this is what the long setup looks like. Then we have the short setup, which is exactly the same. You would need a buy side liquidity sweep, which is a sweep of a swing high, then a tap into a 1 hour or M15 for value gap, which is going to be a bearish higher time frame for value gap. Then you need price to create a bullish for value gap just before sweeping this high, which will tell you that there's a lot of aggressive buyers sitting inside that gap. Then you would need price to disrespect that bullish for value gap, telling you that the buyers right here are getting squeezed and that the sellers are the one controlling the market, and that you have a lot of probabilities to go back towards the first low that you see here. So the trade would be your stop loss above the inversion, and you target the 1-to-1, target basically the most recent low right here. Now let's take a look at the first setup that we had this week. You can see on this price action we had buy side liquidity sitting above here. We have also a 1 hour fair value gap that was sitting above the buy side liquidity. Right there, what am I looking at? We had a possible short setup, which would be a buy side liquidity sweep tapping into a 1 hour bearish fair value gap. Then you need a singular fair value gap to be created on the leg that created the sweep, then an inversion fair value gap of those aggressive buyers. You go short and you try to target the most recent low, which would be this low right here. Now if I go on the 2-minute chart, you will see what happened. We had a nice leg up to sweep that buy side, and you can see right here we wicked that level, which tells me there's a lot of sellers, passive sellers, that were sitting inside of that bearish higher time frame fair value gap, which is an hourly fair value gap. Then on that leg, what can I see in terms of order flow? I can see that a lot of buyers are sitting between this candle's low and this candle's high right here. So if I can see price disrespecting that fair value gap, then I know that buyers are going to be squeezed here and that the sellers are going to be the one in control. So I can go short and targeting my internal low here for a 1-to-1. So right here you can see swept buy side, tapped into that 1 hour fair value gap, created that singular leg with one clear bullish fair value gap right here. Then you can see on this candle, this next candle after the sweep, we disrespect that bullish fair value gap, which tells me that there is a squeeze here in the market and that there's a lot of chances of me going back towards this internal low. So right here I will go short, stop loss just above this candle's high, and I will target a 1-to-1 risk to reward to scalp this internal low. This is a really good strategy if you're trading prop firms. I really suggest you to take a look at that. So right here, let's take a look at what happened in 1, 2, 3. So 3 times 2, 6 minutes, and you hit your target. So it was pretty accurate trade right there, and a really good framework behind it. If I had to recap this trade again, you can see that we have a buy side liquidity sweep, which is a sweep of an internal high. Then we're tapping into a higher time frame bearish fair value gap, which is a 1 hour bearish fair value gap. Then you have the creation of a leg up that created the sweep with one clear bullish fair value gap, which tells you that there's a lot of aggressive buyers sitting between this candle's low and this candle's high. And once you see that bearish candle bursting through that gap, you know that there's going to be a squeeze in the market and that the sellers are in control and the buyers are getting squeezed, so they will cover their position at the gap and you will have a lot of chances to hit this internal low here, which is going to be your trade. Let's take a look at this second trade right here, which was on Tuesday, January 14th. The first trade was on Monday, January 13th, if I didn't say. So right here, you can see we have buy side above and we have sell side below. But right here on this buy side, there's no fair value gap sitting above this buy side. So I'm not looking to short that. I am looking for a possible long once we sweep this internal low, which is going to be my sell side liquidity. And we also have a bullish 15-minute gap. So we have a possible long setup if we can sweep this low right here, tap into this bullish gap, create a leg that has one clear bearish fair value gap here, which tells us that there's a lot of aggressive sellers trying to push price down. And right here, if price can burst through that gap and close above that bearish fair value gap, creating a bullish inversion, we will go long right here, targeting the most recent high. Now let's go to the 1-minute chart and let's take a look at this trade. You can see we have clear sell side sitting below us and a fair value gap on the M15. So right now we're looking for price to sweep the low and create one singular fair value gap. So you can see right here, we created one fair value gap that tells us that there's a lot of sellers sitting between this candle's low and this candle's high. So once you sweep that sell side and you tap this 15-minute fair value gap, if you have enough buyers to close above this fair value gap here, you have a lot of chances of getting back towards this most recent high. So we're just going to be waiting for a bullish closure above this fair value gap to take a possible long. So right here would be where I would long, stop loss just below the inversion right here, and I would target a 1-to-1 right here. Since the high is really close to us, as I said in the beginning, we're going to put our stops to break even once we hit this high, and we're going to let it ride for a 1-to-1. You could also mark out the second most recent high and try to target it, but I really like to keep my trades small and fast for the prop firms basically. So right here, let's take a look at the trade. You buy right here, and in 1-2 minute right here, you would be break even right there. And let's take a look at what happened right there. And boom, in 3 minutes, you hit your target plus 560 bucks. If I had to recap this trade again, you can see that we have a sell side liquidity sweep right here. Then we're tapping into a 15-minute bullish fair value gap. Then the leg that created the sweep has one clear bearish fair value gap, which tells us that the sellers are located between this candle's low and this candle's high, which is the fair value gap. Then you're looking for price to close above this fair value gap so you can scalp the most recent high, because you know there's a squeeze in the market, a squeeze of those sellers and an aggression of the buyers. Now let's take a look at the third setup that we had this week, which was on Wednesday, January 15th. You can see that we had a clear buy side liquidity pool sitting above and we have a sell side liquidity sitting below. But right here, the only possible setup that I have would be a long setup, because we have a bullish fair value gap below that sell side right here, which is one of my conditions to go long. But right here, we don't have any gaps to our left if we sweep buy side. So the only possible setup right here would be a possible short. So right now, what do I want? I want price to sweep that sell side right here, tap into that bullish fair value gap, create a leg that has one clear bearish fair value gap, and then we will wait for price to disrespect that bearish gap, which is going to be telling us that we're going to squeeze those sellers, and then we're going to try to long for the most recent high. Now let's take a look at the setup on the 1-minute chart. You can see we have the sell side sitting below. We have the 15-minute bullish fair value gap sitting below price also. So right now we're going to wait for price to sweep this internal low and create a bearish fair value gap on the way down. So right here, this is exactly what we have. We created basically a bearish fair value gap on that leg here that created the sweep. So once we're going to close above this fair value gap, I will know that the sellers located between this candle's high and this candle's low are going to be squeezed, and we have a lot of chances of going back towards this most recent high. So right here, I will wait for price to disrespect it. We have it right here, and I can go long right here, stop loss just below this candle's low, targeting a 1-to-1 risk to reward. So right here would be my trade. Stop loss just below this candle's low. I would buy, and it would take me 1, literally 1 minute plus 620 for a nice base hit trade. Literally 1 minute and I took out my profits. So if I had to recap this trade again, we have a sell side liquidity sweep into a 15-minute bullish fair value gap. Then the leg that created the sweep has only one clear bearish fair value gap that we disrespected right after the sweep, which tells me that the sellers are getting squeezed and that the buyers are the one in control of the market. So I can go long at the inversion, targeting the most recent high for a 1-to-1, because I know that the market is most likely going to hit this internal high because of the squeeze. Now let's take a look at the fourth setup of the week, which happened on Thursday, January 16th. So you can see we have a nice sell side liquidity pool right here, which is the London lows, and we have a 1 hour fair value gap. Right now I'm looking for in my long setup, which would be a sweep of that sell side, tap into that 1 hour fair value gap, a clear leg that created the sweep, which has a 1 minute, 2 minute or 3 minute bearish fair value gap, and I'm looking for that fair value gap to be inverse so I can target the most recent high. So right here I will go down to the 1 minute chart, and let's take a look at the possible trade if we can sweep this London low that is sitting just below us. So right here I will wait for price to sweep this London low and create a 1 minute, 2 minute or 3 minute fair value gap. So right here you can see we created that 2 minute singular leg fair value gap, and this is my most recent high. So if I can disrespect that bearish fair value gap, I will know that the chances of me going back towards this most recent high is a lot. So I will then go long at the close, targeting that high here for a 1-to-1. So right here, this is exactly where I know that the sellers located inside of that fair value gap are getting squeezed and that the buyers are the one in control after the London low sweep and the tap of the 1 hour gap. So right here, I will go long at the close of this candle, stop loss just below this candle's low, and I will try to aim for a 1-to-1 for the most recent high. And right here, 2 minutes, 4 minutes, and you hit your target for a $310 gain. And if I had to recap this trade, we have a sell side liquidity sweep, which was the London lows. Then we had a tap of a 1 hour fair value gap, which was a bullish fair value gap. Then we have a leg. The leg that created the sweep has only one clear bearish fair value gap on the 2 minute chart. We inversed it, which basically told me that the buyers were the one in control and that the sellers were getting squeezed. So I had a lot of chances of going back to the most recent high. So this is the reason why I took the long on January 16th. Now let's take a look at the fifth and final setup of the week, which happened on January 17th. So right here you can see by looking at this chart that we have two possible setups. We have a fair value gap on the M15, a bearish fair value gap that we can play short off of, and we have a bullish fair value gap that we can play long off of if we can sweep either an internal high or an internal low. So right here, if we sweep this internal high, buy side liquidity sweep into that 15-minute bearish gap, and then we disrespect that bullish fair value gap that created the sweep, we have a short setup. And if we sweep this sell side liquidity right there, tap into that 15-minute bullish gap and inverse the bearish gap right here to the left, then we're going to have a possible long for the most recent high. So right there, two possible setup. Let's take a look at the 1 minute chart and what happened. So right here, this was when the 15-minute low got formed. I'm looking to go and trade a possible short if we can sweep this high. So right here, we swept the buy side liquidity pool into a 15-minute gap, and we have one singular fair value gap that created the sweep here, which tells me that the buyers are located between this candle's low and this candle's high. So once we sweep this high and we close below that bullish gap, I will know that the buyers are getting squeezed and that the sellers are the one in control. So then let's take a look at what happened. We have a nice inversion on the 1 minute chart. This is where I would go short, stop loss just above this candle's high here, and I would try to target the most recent low. And right here, the most recent low is a negative RR, so I would try to go break even at this internal low, and I would let the rest ride for a 1-to-1. So right here, it would take me a few minutes right here, and in 10-12 minutes you hit your target. So if I had to recap this trade again, we can see that we have a nice buy side liquidity pool right here. We swept it into a 15-minute bearish fair value gap. We have one leg that created the sweep, which has one clear bullish fair value gap. We inversed it, and then we went short to target the most recent low. So hopefully you guys enjoyed this video and enjoyed seeing the possible trades that you could have caught to trade base hits with prop firms. Thank you guys so much. See you guys in the next one. Peace out.